Hello, everyone. Welcome to the market update for Tuesday, February the 16th. The market's been kind of all over the place today, a little bit hard to read. Last night, it looked like we were going to have a strong opening, and things were looking really good across the board last night and when I was looking at the futures, but had a little bit of mixed results early on, and it's just kind of been back and forth. We'll take a look at those individual charts here in just a second. As far as the direction alerts are concerned, momentum is moving into the kind of the extreme range right here, but it's still on the kind of the left side of that that extreme bar there, so it could get even more extreme. And definitely with the weakness today in the market, I'm not seeing anything that's showing extreme bullishness at this point, which actually could be a little bit of a good sign that if the market doesn't pull back here in the next few days, it could continue to run. It hasn't kind of reached that extreme range where there aren't many people that are bearish. I think today's kind of reminding everybody that the market doesn't just go up every single day. The breadth indicator is off the extreme. It's in the high range, but again, it's not showing any extreme. And same with sentiment. It's in kind of the high range of complacency, but not extreme complacency. The buy-sell ratios had gotten pretty wide. We pointed this out last week, but they're starting to kind of contract a little bit, and may continue to contract a little bit if there's continued selling today. Sentiment indicators pull back a little bit from the extreme, but it's still pretty close, so we got to keep an eye on that to see any sort of a big market push. I really thought, looking at last night, that we're going to see a market rally today that would throw a lot of these into the extreme ranges. So maybe that's good. Maybe getting a little bit of a pullback here early in the week could allow it to rally through to the end of the week. So we'll see how that kind of plays out. As far as the individual charts here, let me switch this over to Candlesticks. You can see we had a little bit of the gap open, and we're now trading lower than that. That's always a kind of a weak price action today. If it holds, now obviously, could things rally into the close and change that look of that? It's possible. But typically, if it holds right here, that's a little bit of a bearish candle. Now, it doesn't always mean that it leads to a decline. We had a bearish candle this day right here. We end up moving flat and then end up moving a little bit higher on Friday, tried to rally a little bit on Friday. But at some point, when you start getting these reversals start showing up, these bearish reversals start showing up, they often do signal some sort of a pullback is happening. These could just be early warning signals of a pullback that's about to happen, and you don't know. Here's a bearish reversal candle that did lead to a quick drop, and so you have to respect these, and especially when they are combined with extreme conditions, you have to kind of expect that. And the SPY is although it's in the early stage of the extreme bar up here, extreme reversal risk, you get a bearish reversal in an extreme bar, and you've got to be, you have to be a little bit cautious. Now, it could just mean that means that you hold off on getting into new trades, or you're tightening up stops in existing trades, or reducing risk exposure by taking some profits off the table and just staying in cash. But when you start to reach those conditions, you start to make those types of defensive choices in some of your on some of your trades. Taking a look at the Dow. Dow's not much different. Again, looks like it could close higher than where it opened, but still higher than the day before. The Dow is actually up. The index is up a little bit right now, But we've talked about that a number of times. When you have close below when you close lower than where you open, but still higher than the day before, than the close of the day before, that's a pretty bearish price action. It means that you've gapped up, but you failed to kind of hold that gap and move things higher. And very often you get some sort of a pullback or weakness following something like that. We'll see how, if this holds, we'll see how tomorrow ends up playing out because of it. The QQQ, again, it didn't gap up as much, and it tried to run a little bit early in the day, but it's faded now. Again, it's showing weakness, and the Russell 2000 although it gapped up at the open, has been down the higher percentage for the day. And so these are all things that are showing some concern. Again, I just don't see anything out there that's screaming a big pullback. So it could just be something like we've had the last few times, where it's just a couple of days where we pull back a little bit. But when you start getting this type of price action on a Monday, it can mean that maybe and actually today's Tuesday, we've got the holiday yesterday, but it could mean that you just have a little bit of a weaker week overall. And we'll see if that ends up playing out. We'll know a little bit more on Thursday of how that kind of plays out there. Moving on to some of the other charts on TLT bonds. Chart of bonds here is still trending lower. We've talked about that weakness and how it just continues to keep trending in that direction. I don't see any sign right now of a bottom or a reversal or anything like that. So we're going to assume that trend is going to continue to move lower. Gold, the chart of gold is continuing to move down. We mentioned last week where it was starting to try to rally a little bit right here. We said probably need to get above this high to go to a little bit of a higher high to get a little bit more bullish on gold. It failed to do that. Now it's looking like it's going to move to a lower low here pretty soon. And so that downtrend continues in gold. Oil is continuing to trend up. It is getting into kind of an extreme range here, but it continues to move higher. Some of the reasons I've been asked a few times. What are some of the reasons for that? A lot of it has to do with there's a number of factors, but some of the major ones recently is that the administration's focus on moving away from fossil fuels, shutting down the pipeline, reducing, trying to reduce supply from the U.S., I think is causing oil to rally a little bit. There's been some weather issues in the South and Texas that has slowed a little bit of production with some of the weather issues. I think that's having a little bit of a factor. But again, most of the world thinks that at some point the other OPEC nations will start to, as prices are up this high, they'll start to really crank production to try to profit from it. There's definitely enough supply out there for them to put more oil online. And I think that'll start to have a weakening effect on the oil rally. But again, as far as the trend, I don't see any reversal in the trend just yet, just that it's getting a little bit extreme. This doesn't always mean a crash or anything like that. It could just mean a consolidation or correction to relieve that extreme condition, and it could continue to trend onward. So I try not to, as you can tell, it's not that I'm an expert in oil production around the world. I'm not trying to be. The chart is definitely still saying that the trend is up, and we're going to trust that trend until it starts showing weakness and starts breaking the lower lows and having lower highs and things like that. So as of right now, despite what OPEC could do or might do or will do, the trend of oil is still looking pretty strong, and a lot of those oil stocks have been outperforming some of the other sectors in the market lately. The dollar, we pointed this out last week, that as it's dropped down to these levels here, it looks like this could possibly be a bearish ABC pattern within the downtrend, meaning that we could see the dollar continue to drop. It's had a little bit of a bounce here for a couple of days, but overall it still looks like it's wanting to head lower, and it looks like it should be heading lower. We'll see. That may look different on Thursday, but that's the assumption right now, is that trend is going to continue downward. And then lastly, the VIX. The VIX is down at very low levels. It broke this kind of key support area right here. Now remember, that tends to be bullish for the market. They tend to have an inverse relationship, the VIX and the S&P 500. But now that you're breaking to these really low levels, you have to look at it sometimes as a contrarian, where if nobody's freaking out or nobody's worried, and yet, especially when you start to see it down this low, and yet you see kind of some technical weakness in some of the charts, which we've been seeing lately, it makes me a little bit concerned that we can get a little bit of a shock sell-off that could happen, that could spike that VIX up a little bit. So that's something I'll be keeping an eye on this week as well, see if we get something like that. All right, let's move on to specific stocks. We have a couple for today. One is one we pointed out, I think, the last couple of updates here. Kirtland's, a 99 strength rank. I still like the chart pattern here. Let's switch this over to signals. It still looks like it's kind of trying to complete an ABC correction. Again, down day to day, more weakness here today. We're still waiting for it to kind of move back towards that buy signal. It's not too far away from going back to a buy signal. It's kind of in the mid-range of the hold section right there. And actually, the fact this is pulling back a little bit deeper is good. It's still good. You like to see those pullbacks correct a little bit, come back a little bit. It allows the stocks to really kind of take off and they start moving again. And here you kind of had a little bit of a deeper pullback right there, and then it shot up afterwards when the trend continued there. So not too concerned about that, but we're still kind of watching that one. And then another one that we were looking at last week is on the move in that same sector. This Lovesac company, LOVE, it went to a buy signal today. Again, we're looking at that same kind of ABC correction right here, and it's moved up quite nicely here. You could, if you're a little bit concerned about the market, the way the market's behaving, and not wanting to buy anything with that little bit of that market weakness today, you could wait for this to see if it breaks out of this range. It still could have nice room to run after that. But that's a nice looking pattern there, and it looks like that trend should continue. And the fact that the stock is up, 5% on a day when the market's showing more weakness, that's a pretty good sign as well. Let's look at the volume today. Volume's higher than it's been for the last few days, so that's a good sign as well. That could be breaking out right here. So I like that one. Couple more under the computer and technology sector. Blink charging company, BLNK. We've traded this a few times. It seems to have pulled back just a little bit here, back to a hold. Now it's been kind of choppy lately through this area right through here. And so this is definitely one I'd want to wait for it to go back to that buy signal, because if it continues to drop and goes to a lower low, that might be a sign that maybe this is going into a little bit bigger correction. But I like this longer term Again, part of the EV, electric vehicle story. And so that one's still what I like for the longer term. But it does look like the trend is kind of, had a really strong upward move right here, and it does look like it's kind of maybe flattening out a little bit. So that does concern me a little bit. But I still like the company, and I still like the chart pattern. It hasn't broken to a low yet to indicate that uptrend is in trouble. So I still like that company there. And then one more under industrial products. And right at the top of the list, 98 strength rank, Plug Power. We've also traded this a few times. We got into this, well, I think a couple times during this big run up right here. I like the big consolidation through here. It has dipped a little bit today, but again, I think that's a good thing that you get a little bit of a retracement or pullback in these corrections. And confirmation, you'd want to wait for this to go back to a buy signal. You could even wait for it to break out to a new high. But this is one that I really like as well. I apologize a little bit for the update today. I usually have a little bit more energy in the updates, and if I'm sounding a little bit sluggish here, I only got a couple hours of sleep last night. It had a lot going on, both market-wise and life-wise overnight. So I apologize ahead of time. Well, I should have apologized ahead of time. I'm apologizing now for a little bit of my lack of energy, but hopefully I'll pick that up on Thursday. But let's move on into the training for today. I didn't mention this at the beginning of the update, but I'll mention it now. The training I'm going to do today is it's still tied to Elliott wave, but it's a little bit more of a fun exercise. And it has to do with sentiment and reading sentiment during the classes on Elliott wave. I've talked a lot about how understanding the waves and understanding the cycles that stocks go through and that markets go through can oftentimes help us act as a contrarian, because very often, as we talked about when we were going over the wave characteristics, very often when you're near a market top, everything will feel bullish, and yet that's when you don't want to be overly bullish. That's probably about when you're about to decline. And so if you're able to recognize that, you're able to kind of fight the tendency to try to go along with the crowd. You can try to go against the crowd. But this phenomenon, though, of crowd behavior shows up a lot of times, and you'll hear this on CNBC a lot of times, particularly amongst the old timers that you might be listening to. They'll often bring up or talk about magazine cover indicators, or it's a magazine cover thing, or what have you. Now, what makes this a little bit ironic is that, or really dates the old timers, is that we don't deal in magazines very often anymore. I mean, everything's online now. Even your magazines, that your Time magazine or whatever magazine you tend to read, is all online now. So you don't really deal with a lot of the physical copy of the magazine. But in the old days, it used to be, as you were going through an airport or something, you'd see different magazines on the stand, and there would be big headlines of those magazines. And at first it became something that was just kind of funny or ironic, but it got to a point where traders realized that it seemed like when the attention was drawn to a particular issue or economic condition or a company of some sort that that usually mark the top or the bottom in the case, tops or bottoms. And again, it goes back to just human nature. Again, let me give you a little bit of example ahead of this. Let's say that let's say you come out with a company that has a new product, and people aren't quite sure if the product's going to work. In fact, a lot of times when these great new products come out, they get laughed at. That'll never happen. We're never going to have flying cars, right? You just can't conceive something like that. Well, then, so there's a lot of times there's no reason to do a big story on something that you don't think is going to work. From a reporter standpoint, let's say. But as the company grows and as their product starts to become popular, as people start asking about it and talking about it, eventually it reaches a reporter that is kind of hearing whispers and hearing rumors about things, and they start to look into doing a possible story about a particular company. And then maybe it's a few months later that now everybody's talking about it, and it's the big craze. It's the most popular thing going on. And that's the time when the reporter feels like it's now time to do the story on that particular product or company. So they go out, they do the big story and all that kind of stuff, and it hits the newsstands. Well, naturally, that story is probably hitting the newsstands at the end of that particular cycle, meaning at the point where there's not much room for that company to go up anymore. It's kind of reached its peak. Now, magazine sentiment should never be a primary reason why you make a trade, but it can be a confirming indicator that things are getting a little overdone. A recent example of this, and this cycle happened very, very quickly, but if you remember the whole Wall Street bets, the Reddit crowd, and GameStop. Well, this had been going on. I had been following and seeing this happening with GameStop for this was a pretty quick cycle. It was a few weeks before anyone knew anything about it. We were seeing this unusual movement in GameStop. There were rumors out there that it might have to do with a group of traders trying to squeeze because it had a lot of short interest. And then the Reddit group became known. The Wall Street Bets was the name of the group, and pretty soon everyone was kind of jumping on there and seeing what was going on. And within about a week or two, suddenly now it was all on the news. Everyone was talking about it. And it was big story. It was a huge story everywhere. And everyone knew Wall Street Bets, and everyone knew GameStop, and everyone was talking about trading GameStop. Well, that was the exact time when GameStop was now hitting, $400 or $500 a share. It was peaking out at the top there when all this attention was on it. Well, that was the absolute worst time to be getting into GameStop, and that's what was happening. People were hearing the hype. They were reacting to the hype. They were jumping in, thinking this thing was going to go to 3,000, and many of them just got really, really burned on it. But that's human nature playing out in a very quick cycle, by the way, because that was only over a few days or a few weeks. But this is just kind of a fun exercise today, just to reinforce that when you start seeing headlines, and although we don't have magazine covers anymore, you do have headlines. You start seeing headlines about certain things that are going on. Be careful not to think that you're a beginner or you're the first one hearing this news. That's when it starts to become mainstream. It's usually the time when you're getting it's nearing the end. Now, this is the same with the way things are trading right now. I'm having nieces and nephews that I haven't seen in years. They, knowing that I'm in the stock market, texting me or calling me, asking me, what stocks they should buy, or what's the next stock that's going to be like GameStop. I can't tell you how many of those I've gotten in the last few weeks. This is behavior that's topping behavior. This is what happens when you get near a top, when when trading now becomes pop culture, when it becomes mainstream, when it's something everyone's talking about, that's not the time to be. It doesn't mean we can't trade that momentum, but you got to be careful because it starts to show up when you're near a top. So magazine titles can often predict crowd sentiment. The crowd is often wrong at market tops and market bottoms. We can use this sentiment to confirm wave counts and to act as a contrarian. Now, these slides that I have are older. There's not, like I said, there's not a lot of magazines out nowadays that I can update this. So we can have a little bit of fun with these older magazine covers and kind of see the nice thing about it is we're looking back in hindsight, so you can see the result that happened after some of these covers came out. I'll show you some of the charts and the wave counts of when these articles came out. And then, you know, to apply it nowadays, you're just looking at, you're kind of looking for big headlines or big media focus. When a story is reaching the nightly news, the ABC nightly news, not CNBC, but the regular nightly news, and it has to do with a particular stock or market, something in the market, that can be a signal that you're reaching an extreme, and that could be positive or negative, depending on what the headline is, or what the story is. Here is one that came out as a Business Week article. It came out February 14th of 2000, so a little over 21 years ago. It was right during the internet bubble of 2000. It was a special report. It said after 107 months, the American economic juggernaut is still going strong. What went right? So it was asking the question, you know, what went right with this huge boom that took place? Here's a chart of the NASDAQ when that article came out. And this is what happened to the NASDAQ over the next few years. Next few years, it tanked completely. You know, so again, it was that you know, that very bullish headline, the boom, you know, something that would attract new people in and think that this thing was going to go on forever. Remember what happens at a market top? The feeling is it's going to last forever. It's going to keep going. It's safe to get in. You know, that's a headline there that would indicate that it feels like it's safe to get in and that it's got some room to run. Here's another one that was just a couple months earlier in December of 1999. The internet mania paid off big time for investors in 1999, and incredibly, the dot-coms have more room to run in 2000. Investment pros see huge growth ahead for the internet and believe net stocks will continue their drive north. Well, they did continue their drive north. This actually came out in December. We did have a couple more months where we had a run up into April there of the NASDAQ, and then bam, you had that big drop. So although this magazine cover didn't mark the exact top, which it won't always do, it told you that you're probably getting near the top when you start seeing that type of kind of overly bullish sentiment in the headline. Here's kind of the opposite one right here. This happened after the internet bubble burst. We had a market sell-off in July 29th of 2002, Business Week. You know, the funny thing here is all you need to do is just get a Business Week subscription. Like I said, now it's all online pretty much, although I think they still have physical Business Week magazines, but you don't have to. You could just next time you're in the airport, just breeze through and see what the headlines is on Business Week or The Economist or something like that, and you might be able to see something that could be marking a major extreme. But this came out just prior to the bottom being reached. It was titled "The Angry Market," wondering how far things were going to drop. Remember, that's the feeling you get at the bottom, right? How much further is this going to go? A lot of the articles in this were talking about how much worse can things get. And then at that marked the bottom, we started to rally up from that from that particular sell-off, that actual as a minor recession we went into at that point. Here's kind of a just short-term bottom that happened. Newsweek article, March 21st, 2005, the incredible shrinking dollar. The dollar had been in decline. It had been declined long enough to where, the Newsweek writers decided to do a story on it. And right at that point, the dollar started to rally. It was right near the bottom, and the dollar started to rally from there. Here's a funny one here. Fortune magazine, Krispy Kreme. Remember when Krispy Kreme? Some of you might remember when it was a hot IPO, and it was on a tear for a number of months. How Krispy Kreme became America's hottest selling brand. That story came out July 7th of 2003. It did have one last little move higher, and then the next couple of years just plummeted. So again, imagine if you're buying your stocks off of the headlines of these magazines. People wonder why they always buy things that are losing money. Well, if they're basing their decisions off of, the opinions of others through a magazine and not looking at the chart, it can be pretty dangerous. This was a big one. We all know where Apple is today, but this is early on in the, this is before the iPhone craze really took off. February 21st, 2005, where it's talking about how big can Apple get. It rebounded from its bottom, and I believe it was 2003, where it was weeks away from going bankrupt or being acquired by another company. That story came out right here, and although this wasn't a major collapse, it did go into a correction right through here where it lost, about a third or about a fourth of its value on that pullback right there. Obviously, since then it's gone on a run. So I don't want to suggest that every magazine article is going to lead to major destruction for that company or for the market in general. But again, imagine if you bought Apple right there and then saw it go from $46 down to $34 over the next couple months, when you thought for sure this positive article on Apple was the thing that made you confident, believing it's going to take off, especially after the run it had right here. So you have this big run up right here, and then this magazine article comes out and it declines shortly after. This is one of my favorites. A Business Week article way back in August 13th of 1979. It was titled "The Death of Equities." If you remember back in the 70s, the interest rates were so high, with inflation being a problem. We had 12, 13% interest rates, and there was really no reason to be in equities. You're making so much from the safer investments with you were making enough money just sticking your money in the bank at that time than risking it in the markets. The markets have been really flat for a number of years, hadn't gone anywhere. There was a story that came out: is this the death of equities? Is this the end of people wanting to be in the market? And that happened prior to one of the greatest bull markets in world history. And again, it came out like right within a few months of when that big run started. So it's just kind of it is kind of funny when you start seeing these. And the reason why I brought up that you see this a lot on CNBC is because this is not something that's this is not something unique. This is not something that I made up or anything like that. This is something that almost all traders have been doing this a while, kind of chuckle. Whenever they see a big article come out or a big focus on a certain area, because some of them have been burned on it in the past, they just kind of laugh like, there's a magazine article, or there's a magazine indicator right there. I'm not going to go buy that thing because that magazine cover just came out and it's bullish on the stock. It becomes kind of a inside joke, so to speak, to traders. because they know a lot of retail traders are going to probably get burned running out and going to buy it based on what that magazine cover is saying. Here is one talking about the real estate boom. Is the real estate gold rush over? Here's one titled "Home Sweet Home," talking about how much people were making on the appreciation of their homes. This is right before the bubble in real estate. Now this had a little bit longer run to it, but it was these articles are starting to come out right near the top of that bubble that burst. In fact, here is a chart of the real estate. This is an old real estate index, and you can see here's where the article came out. Had a little bit of a push higher. It came down and tried to rally a little bit, and then collapsed. There was the kind of the financial collapse that led to the real estate collapse too as well. Here's one on Google. Came out in December 5th of 2005. With the market cap in orbit, more cash than a small nation, Google's heft is altering the tech industry's behavior. But when does its long-awaited shopping spree begin? And it was right at that point it went into it's actually ended up being a little bit of a deeper correction, but it went into a little bit of a deeper correction right there. This one came out June 9th, 2008. Oil in the economy. Had this huge run up in oil. This is right before the financial collapse. And then again, it went a little bit further after that, but then it had this huge drop all the way back down. So that's just kind of, like I said, just kind of a fun exercise. But it's something to start paying attention to. Pay attention to those headlines, especially as it relates to the chart. If you can see that the chart has already been moving up and the stock has been moving up and it's starting to reach extremes, if you look at the chart there on TradersPro and it's in that extreme reversal risk, and you're seeing a major headline news come out, or even sometimes you'll hear analysts come out and upgrade a stock. They'll upgrade a stock when it's already at a extreme reversal risk because it's been going up for several months. That could be a sign that this thing's probably in its final stages here. But it's also a lot of people just start talking about it. Especially a stock that's just not mainstream, but it just starts to become really, really popular. You got to be careful because it could be still in that wave 3. But when, like I said, when the average person is talking about it, when it's making its way into pop culture somehow, that's usually when you have to start to say, boy, this is acting like a top or acting like the end of a move, not the beginning of the move. And that's where you can be a contrarian, because you can recognize that and make decisions to kind of manage that, whether it's tightening stops on the trade you're in or taking some profits off the table or something like that. All right. Thanks, everyone. We'll see you Thursday for the stock specific class. Have a great week. Bye now.